inflation is an expansion of the money supply, which includes credit. So as we get more money and more credit into the economy, that's inflation. And we have massive, not only monetary growth, but credit growth. And that's what's fueling the debasement of the US dollar, which is why prices go up. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pin comment. Stay ahead of the curve. Don't miss out.
Asset that all these central banks can rely on. It is the system that dominated pre-Bretton Woods, and even in the initial years of Bretton Woods, up until 1971, even though the world was using the dollar was redeemable in gold. So the world was still backing its currency with gold, even though they did it through the US dollar. But now I think, just like we went off the gold standard in 1971, the world is going off the dollar standard, and it is going back on a gold standard. And now what's also significant is Wall Street has finally woken up to this reality. And now you're seeing major Wall Street banks that have never recommended gold now saying that their clients need to have exposure to gold, whether it's 10%, 20%. It's now something that, mainstream investors are finally going to start to participate in. And, prices, I think, are just going to head ballistic from here. Silver just hit a new all-time record high. It's above $51. We finally took out the peak from 1980. I think we're going to be at 100 pretty quickly. We could even be at 100 next year. And I think gold, which is now above 4,000, has a shot at 5,000 by the end of the year. But it may not get that high this year, maybe 4,500. But I think 5,000 is definitely in the cards for 2026. In fact, we could be at 6,000 or higher next year in gold. Most people have done better in gold than in the stock market over 10 years, 25 years. And they're certainly doing a lot better in gold this year by a long shot. They keep talking about the record highs in the stock market. This is one of the worst years ever for the U.S. stock market if you price it in gold. So gold investors are doing a lot better. But my point is that now, finally, people are not getting laughed at for recommending gold. Right now you have, okay, yes, maybe we should have gold in a portfolio. Yes, right? They should have had it in their portfolio 25 years ago. All right. But the fact that they're now starting to include it, not only does that, basically validate what I've been saying all along, but it means that the demand for gold is about to go through the roof because central banks are going to keep buying. They have a lot more gold to buy than they've already bought. But now they're going to be competing with private investors, both institutional and retail, in this market. And, I have this gold company called Schiff Gold, and sales for the last 3 years have been very lackluster. I mean, it's not like gold has been going way up. It's doubled, more than doubled in the last 2 years. Yet business has been slow because people were afraid that gold's topped out. I don't want to buy the highs. So a lot of the normal buyers have been on hold. Now everybody is starting to realize that the sky's the limit on gold, that there is no top because there's no floor to the dollar. That's really what's happening. The dollar is going to be losing a lot of value as we open up the spigots. The Fed is cutting interest rates into rising inflation. Not only is inflation well above the 2% target, but it's headed in the opposite direction. It's going up. Yet the Fed is cutting rates anyway. I think by next year, they'll be back at QE because they're going to try to keep long-term interest rates from rising, which is what they're going to do. We're going to see a backup in interest rates as the world sells treasuries to buy gold. In fact, you mentioned, Morgan Stanley said the 60-40 portfolio should be 60-20-20. where you cut the bond allocation in half. So if all these Morgan Stanley clients sell half their bonds, which would be a lot of U.S. treasuries to buy gold, not only does that push gold up, but that pushes treasury bonds down and pushes yields higher. And the Fed doesn't want higher yields. Trump doesn't want them. So the only way to bring them down is massive quantitative easing, which is just going to drive even more demand for gold, because all that is more inflation and more reasons to get rid of your dollars. Yeah, well, first of all, we've made it clear that China is our enemy, right? And so China recognizes that, despite the fact that they're our biggest supplier of goods and one of our biggest lenders, right? And B, that I think ultimately will be backed by gold. I think the Chinese are headed for a Chinese currency that is backed by and maybe even convertible into gold, just the way the U.S. dollar was at, once upon a time. I think that is the direction that they're going. And, China is the world's biggest gold producer. So they have a lot of gold in China that they're producing. They just don't export any of it because the Chinese government buys it as fast as they could dig it out of the ground. Well, people are recognizing the path that we're on. I mean, the idea that the Fed is going to maintain 2% inflation is now a complete fiction. Nobody believes that anymore. I don't even think the Fed believes it. And I don't even know that they have a target that fact. And they're starting to get out of dollars and into other assets, whether it's, gold, stocks, or, crypto. I mean, I think the people that are choosing Bitcoin are making a mistake, but they're choosing it for that reason. They think they're getting out of the dollar into something better. And the CPI, right? When you're looking about inflation, the CPI is a very flawed measure of the effects of inflation. And that is by design. It's not a coincidence that the government designed a methodology for tracking inflation that understates how much inflation there is. Because the government creates inflation on purpose. Inflation is a tool that the government uses to capture what's going on. So if you look at the CPI and, prices are going up 3%, that's not even close to reality. You have to at least double it, if not more, to get a more realistic assessment of how much prices are going up. But what really is inflation is not prices rising. That's an effect of inflation. Inflation is an expansion of the money supply, which includes credit. So as we get more money and more credit into the economy, that's inflation. And we have massive, not only monetary growth, but credit growth. And that's what's fueling the debasement of the US dollar, which is why prices go up. And it's why people now want to get out. They want to get out of their US dollars. And it always believed that Fed independence was, a pretense, that behind the scenes, the Fed and the U.S. Treasury, worked hand in glove. But they didn't want that perception to be there. They wanted our creditors to believe that there was independence and that there would not be political pressure on the Fed to just create inflation and, debase the dollar. Because if you're a creditor of the United States, you want to know that the value of the dollar, is going to be maintained and not sacrificed for political expediency. But I think what the Trump administration is revealing is that pretense is a pretense, that there is no. And so why would you want to be a creditor if it's obvious that you're not going to get paid? That yes, you might get your dollars back, but by the time you get them, they won't buy very much. So why not get rid of them now? And so this is the danger that we're facing. We're accelerating the realization that this is just a pretense and that the Fed is an arm of the U.S. Treasury, which is, it's not supposed to be. It's supposed to be completely independent. And, the reason that it's independent and it's a private, it's not a government agency, it's private. The reason was because the Constitution didn't even authorize the federal government to issue paper money. So it couldn't do it. So it created a private enterprise, the Federal Reserve Bank's ability to fire Lisa Cook by claiming that the whole concept of an independent Fed itself is unconstitutional, and really let the world know who controls the printing press. The Trump economy, is not that much different than the Biden economy. I mean, the biggest thing is the massive government spending and the massive deficits. And so not only is that the same, but it's actually worse. Yes, we've added on tariffs, but I don't like tariffs. I mean, I'm a free trader, and tariffs are taxes. We need more taxes, unfortunately, because we have huge deficits. But the tariffs, the way they're being operated, are just going to make American industry even less competitive. And it's going to result in the manufacturing sector, what's left of it, shrinking even more. But what I particularly don't like about the tariffs, too, not only the unconstitutional way that they've been imposed, because they really need to be imposed by Congress and they need to originate in the House, because they are taxes, and that's how taxes are supposed to be raised in the United States, not enacted by a president, but passed through Congress. But I don't like all the exemptions that are being thrown about, and how Trump uses the tariffs as a weapon to try to get companies to give concessions or to do things that they might otherwise not do, but for the extortion of, well, if you do this, we'll exempt you from tariffs. And I also don't like the fact that, some companies can bribe their way out of the tariffs, larger companies, whereas smaller companies are stuck, paying the tariffs. So I don't like this kind of central government planning, this micromanagement of the economy. Trump was very critical of Kamala for the socialist policies that she advocated, yet he's pursuing a socialist economic agenda of his own. So I don't like anything that Trump is doing when it comes to the economy, right? There's some stuff that he's done that I can support, but it's not economic. The economic policy is horrible, and the precedent that it's setting is even worse, because Trump's not going to be president forever.